Hi everyone, thank you for joining us on today's webinar. My name is Bethany and I'm the Relationship and Engagement Manager here at UMI. And today I'm joined by my colleague Dave, who is our Project Manager, currently working on some of our growth fund and finance projects.
Hi everyone.
Here at UMI, we help businesses by taking the hard work out finding the very best expertise, information and finance. And that's why we're here today. During the current circumstances, taking the hard work out finding the very best support available is even more important. So before we get started, if you have any questions during the webinar, please type them into the Q&A chat box in your Zoom control panel. Now, without further ado, today we're going to discuss the Coronavirus Business Interruption Loan Scheme and what support is out there for businesses during the pandemic, which brings me to our guest. So today we're joined by Shaun, the Senior Manager at the British Business Bank. So hi Shaun, would you like to tell us a little bit more about yourself and the British Business Bank?
Yes, so I've had a career in banking for about 29 years. I've worked for the British Business Bank for 1.5 years of that time. And we're not a bank in the sense of a Barclays or Lloyds or NatWest or indeed any other commercial lender. We're responsible really for delivering a number of government-sponsored programmes throughout the UK. And we're effectively the UK government's development bank. We're owned by BEIS, specifically Department of Business, Energy and Industrial Strategy, and funded by the UK Treasury. And we run a number of programs throughout the UK. So, for example, Startup Loans is actually our program. We control that. We also run the Northern Powerhouse Investment Fund and a whole host of other programs throughout the UK. So consequently, sorry, my wife has just distracted me there. So, go away. The perils of working from home. Go away. And tell the Amazon man to go away too. So, but yeah, so effectively a number of programs throughout the UK, including Northern Powerhouse Investment Fund. But we're unusual in the sense that we operate on a devolved model. So we employ partners to work on those programs on our behalf. Ultimately, they're funded by the bank and by ultimately the UK government, but we're not delivering the programs directly. So a business doesn't come to us directly for funding, whether that be in the debt funding or indeed equity funding. They are typically going to one of our partners, but we are overseeing those processes and those funding programs. And we control, well, we did until the pandemic control about £8 billion worth of funds. That number has obviously gone up quite a lot since the pandemic because we've had to launch a number of other programs, which we'll talk about today, including things like CBILs and bounce back and so on. Okay.
That's great, Shaun. Thank you very much. So our first question is, what exactly is the Coronavirus Business Loan Scheme and how does it work?
Yeah, so the scheme was originally announced, well, you're almost going back to the budget now, which is March, which seems a long, long time ago, but it's evolved and changed roughly 3 or 4 times. So effectively, the scheme was introduced to help businesses secure funding to support them who were COVID impacted. So essentially, the premise of the scheme is you've still got a great business. You continue to have a great business, but what has stopped you being able to develop that business, take it forward, is the COVID. So you no longer have access to the turnover, the revenue, the debtors, the creditors. You maybe had to mothball your business for however many months this pandemic continues for. You need funding as some sort of bridge, working capital funding, and the CBILS program is designed to enable the banks to lend under those circumstances to support your business and take your business forward. The scheme premises that there's an 80% guarantee, that's always been in place, and it does use the rails of a previous program called EFG, or Enterprise Finance Guarantee, that was a 75% guarantee. And it has evolved over time and has changed. So 80% government guarantee, but the critical thing is it's debt. It's not a grant. It's not a loan. It's not even a repayable grant. It is a loan, and at some point the business has got to make the repayments based over a 6-year term. Interest rate agreed by the lender at the outset, based on their view of the risk of lending to that business. But they have the comfort of knowing there's an 80% guarantee that underpins it. To cover in the event of a business was to fail, which and banks use quite a lot of technical stuff. They call them loss given defaults and probability of defaults, LGDs and PD ratings. But essentially, those ratings will have increased because of the pandemic. So the risk of a business failing is greater to the bank. The guarantee gives them comfort to be able to lend. They would like to lend, and in normal circumstances they probably would have lent, but what stops them is the pandemic. The guarantee hopefully gets them over that hurdle and enables them to get the funding out the door to the business to support them going forward. But obviously we've seen some variations on those on that CBILS program. There was one program when we now sort of got 4 that have spun away from it, if you like, going forward. But yeah. Mm-hmm.
Great. And you mentioned there about things evolving. What changes have been made then in terms of the scheme's features?
Yeah, so the interesting thing was that a lot of lending is for under £250,000. That's the reality. And initially, it was at the lender's discretion if they took a personal guarantee or not. What we found was every lender took a personal guarantee, no matter whether it was a discretionary or not. They just took it as standard. They wanted the additional comfort. So eventually, after sort of conversations between the bank, the Treasury, and the major UK lenders and the UK, it was agreed initially on a sort of a gentleman's agreement, if you like, that under 250 they wouldn't take a personal guarantee. That then became mandatory shortly thereafter. So if you're borrowing under 250,000, they don't take a personal guarantee. They can't take the principal private residence, so your family home, the security. But what they can take, and sometimes people don't realise this, they are still allowed to take company security. And people don't understand that. So company security could be a debenture, so that could be a charge over your book debt, which is normally the most valuable thing, but it would also pick up any plant or machinery that was unencumbered, so it wasn't on finance, HP, etc., or on an operating lease or something like that. So they could take that as well. Above 250, they are allowed to take a 20% guarantee. And what we mean by that is it goes on a ranking basis. So banks will always look at the worst case scenario if the business fails. So they will look at the company security first. So they'll take company security, so a debenture and any other available security they can get. So they might take a charge over premises, for example. They'll then fall back on the personal guarantee for 20% of any of the outstanding balance at any moment in time. And then they look at the government guarantee last. So it goes on a sort of 1, 2, 3 basis. Because ultimately what people need to bear in mind is, oh, well, there's a guarantee, there's a guarantee. Who's actually giving the guarantee? People say it's the UK government. Yes, that's technically correct. But who are the UK government? The UK government are the people. They are us. They are the taxpayer. So ultimately the taxpayer's got to pick the tab at the end of this if there's any lending that's irresponsible or inappropriate. So what we're trying to do there is focus the mind of the lender and say, well, actually, you want to help this business, but actually you need to make sure that you've got all your ducks in a row and you're not just using the guarantee as an easy get out. Because we don't want to see wholesale claims. We want to see responsible lending to businesses that can afford to make the repayments, because they've only got a 6-year term in which to make the repayments, and that it's done in an appropriate manner to support those businesses and carry them over. And that's the thing, it is a 6-year term. If you've asked for repayment holiday at the outset as well, that cuts that term down. And that's the thing about CBILS that people need to bear in mind is for the first year, your interest and fees are covered by what they call a BIP, or a business interruption payment. But that doesn't mean to say you don't have to make repayments on it. You only wouldn't have to make repayments if you asked for a repayment holiday. The repayment holiday is at the discretion of the lender. So if your business is COVID impacted and you have little or no turnover, how are you going to make the repayments? So I would ask for a repayment holiday and try and calculate what you feel is appropriate. What I have seen people do is sometimes they ask for 12 months and they get 9, or they ask for more than 12 and they get 12, or they ask for 6 and they get 3, or whatever it might be. But try and factor that in to the conversation you have with your lender. Some of them may offer it anyway, but I would ask as well to be on the safe side. And always bear in mind that the rate's at the discretion of the lender at the end of the day. Yeah.
Great, thank you. And how will the new bounce back scheme differ to this?
Yeah, so bounce back's slightly different. It's not really son of CBILS. It's slightly different in the sense that it's a mass market product effectively. Essentially, it's £2 grand to 50 grand. and it's a term loan example only. Sorry, somebody's just trying to call me there, so I'll get him later. So it's £2,000 to 50 grand, and it's a set interest rate, which is 2.5%. They can't charge anything more than that. There's no fees involved. The business interruption payment on the interest is covered for the first 12 months, similar to CBILs, but they get an automatic 12-month holiday, and the term is automatically 6 years. Obviously, with CBILs, you might go along and say, well, I don't want 6 years, I only want 5 years. Bounce back has to be 6 years. It's very much like a standardized product, and it's only for term lending, only for term lending. And it's 100% guarantee, and that's the big difference. So what we have done by putting the 100% guarantee, we've effectively removed the decision-making process around credit for the banks, because they know that if a business was to default, they can recover all of their outstanding loan balance. But what they do have to do is, so they have to make sure that the business wasn't in difficulties at the 31st December 2019 or thereafter. And what we mean by that is that they're not in any insolvency proceedings. They're not facing a winding up petition, for example, from HMRC, that type of thing. They've obviously got to do, if you're not an existing client of theirs, they've got to do then know your customer and know your business checks to identify and verify who you are as a lender. And that's particularly true of the second, who you are as a borrower for them as a lender, rather. But that's particularly true with second tier businesses, second tier lenders, where they don't need you to necessarily move your bank account to them. They may just offer, funding facilities, and that's all they do, but they don't know you, so they've got to check who you are. And your business has got to be in existence at the 1st of March 2020 as well. And that's to stop fraud, where people just create a shell company, they buy something off the shelf, create it, and then get themselves a bounce back loan and vanish into the distance. And that it's to try and stop that sort of fraudulent activity effectively.
Yeah.
There is a turnover thing as well, which I'll mention quickly for bounce back. The maximum loan you can have is 50,000. So if your turnover is 400 grand, maximum loan you can have is 50,000. If your turnover is 100,000, the maximum loan you can have would be 25 grand. And the reason why I say that is it's 25% of your annual turnover. Now, the annual turnover really needs to be confirmed from your latest accounts that you've got, that you hold on file. Another misnomer that I found the other day was somebody said, "Oh, I'm a sole trader, I can't have a bounce back loan." You can. You don't have to be a limited company to get a bounce back loan. Be a sole trader, partnership, limited company, LLP, so limited liability partnership, you can get a bounce back loan. And I think that's where sometimes there's been a degree of confusion, and people thought, "Oh, I can only get if I'm a limited company." That's not the case. Mm-hmm. So bounce back has seen huge volumes go through the banks. Typical turnaround times are normally probably 48 to 72 hours, but sometimes they may have a query that they need to clarify with you, and it may take longer because there may be something, a piece of information that's missing or something like that, something that they need to sort out. You can go to more than one lender to try and get a bounce back loan. What I would do though is, if you're doing that, you must declare the fact that you've applied to one lender and you applied to another, because you can't have two bounce back loans. If you've got a CBILs, let's say you've got a CBILs of 30 grand, you can ask for it to be changed into a bounce back loan. What you can't do is have two of them operating at the same time, because it's double state aid, because it is a state aid product effectively. Not allowed to. Yeah.
That's super, Shaun. Thanks for talking us through those two schemes. So if a client's unsure where to go next, what would you advise them in terms of attaining financial support and approaching the lenders?
Yeah, so when I was a relationship manager, it was much easier for me if somebody presented all the information on day one. So first thing I would do is when you approach the lender, ask them what they want to be able to process your application. Get that clearly understood at the outset. And the typical things they'll ask for, let's assume it's a CBILs facility. They would normally ask for 3 years accounts or accounts from inception. Or, for example, let's say I signposted somebody a while back who was looking for a funding, and they'd only been a limited company for around 2 years. And I said, well, then give them the accounts for when you were a sole trader before. So they've got a trend. They've got 3 years. So 3 years accounts, management figures up to date. The worst thing you can do for a bank is give them figures that are 2, 3, 4 months out of date. Most people now are using some sort of cloud accounting software of one sort of Xero or another product of that nature, and therefore can give them the most up-to-date picture as at the end of the most recent month. So we're in May now, end of April. Give them the figures up to date. And typically they may ask for projections as well. So they may ask for something like 12 months projections, perhaps a cash flow. And be realistic with the cash flow. If you've got no turnover, you've got no turnover. But do try to show that you've made efforts to reduce your costs. So you've furloughed your staff if you've got staff and you've had to furlough them, that you've got your grant if you're able to secure a grant from the business rates relief, that you've cut your costs to the bone, you've talked to your suppliers. I spoke to somebody recently who was still advertising even though these premises were closed. Well, what's the point of advertising to try and get trade if you don't need to do that anymore? I know some insurance companies have offered reductions in premiums as a sort of COVID impact help. I spoke to one business and he hadn't taken that option up. You think I should have asked? And I said, well, surely if that's going to save you something off your bottom line, that's a good idea, because nobody knows how long it's going to go on for. So anything you can do to sort of say, I've done everything I can. My mum used to say, God helps those who help themselves, Shaun, and try and do as much as you can. So you present everything. Well, this is what I've done to help myself. This is all the information that you asked for, Mr. Bank, and here it is in a nice, pretty bow. So what you don't want is a relationship manager having to come back going, oh, you said you give me 3 years accounts, you give me 1 year. You said you give me your latest management figures, they're 2 months out of date. They actually haven't got time to do that. They haven't got time to chase around after you. Make their job as easy as possible, as slick as possible, and clearly articulate why your COVID impacted as well. You'd be surprised the number of people, when I was a relationship manager, who couldn't tell me why they wanted to borrow the money. They couldn't clearly articulate how that figure was derived as, and what the money would be used for. Now we know most of it COVID will be used as working capital to carry people as a cash bridge, if you like. But how have you got to that number? Because I'll ask that. Yeah, and any lender should.
To add something to your comment there, one of the things that I see quite regularly, a cash flow starting from a zero balance, not an actual bank balance. That's one of my pet peeves. But two questions that I'd like to ask you, Shaun, before we start. One's quite a technical one. When you were talking about cash flow and your turnover dropping, this isn't the technical one, I'd assume the lender's going to want to see the business forecasting to come back out of it to show they're a viable business at the end.
Yes, ideally. And I know it's very difficult for businesses to know when they're going to be allowed to open, and we're starting to see obviously lockdown restrictions relaxed over the coming weeks and months. But you have to sort of, what is a cash flow? It's a bit like looking at a crystal ball and looking into the future. But I think if you can clearly show your assumptions, so I'm assuming that my business doesn't open until X. I only start to see a small pickup in turnover, and it takes me another 3 or 4 months or 6 months or whatever it is beyond that point to get back to levels pre-COVID. Clearly articulate that and the assumptions you based it on. The worst thing you can do is, and I've seen this, people, they press the button and it just does a spreadsheet and it just puts all the same numbers in, and my turnover is going to rocket back to 100,000 a month, and it's just going to happen instantly. It doesn't. It's going to take a time to. You've been in you've mothballed your business. You've been in the deep freeze for 3, 4, 5 months, however long it might be. It's going to take a while to thaw that out and start to build things back up again. Because the businesses you deal with probably were also in the deep freeze as well, and had shut down, and so it takes time for them to come out. So I think it's being realistic.
Superb. Now my second question, which is the technical one, it may not be appropriate for this scheme. You mentioned this is state aid, so do the clients have to follow state aid rules, such as they need to prove they're not in financial difficulty?
It is state aid. It is state aid, but it's done under a temporary framework. So if you've had an EFG before, it doesn't fall into that category of dropping in on the state aid. The business interruption payment, for example, you'd have to the European Union rules are 800,000 euros for it to be, for you to go over the top. Not many SMEs are going to go up to that level in terms of interest and fees in the first 12 months. It is the lower amount for businesses in the ag sector, in aquaculture, which I'm reliably informed is fish, fish farms and places like that, because I've never heard of that phrase before. But I think that's 120,000 euros in ags, 100,000 euros from what I remember. The question and answers we have on civils are about, there must be over 100 questions and answers. It's quite baffling at times. Even we have to go and look at the answers sometimes to drill down, particularly if it's a technical question. Yeah.
Super. Thanks very much for that, Shaun.
We've just had a question come through as well. Can the bounce back loan be repaid early?
Yes, you can repay it early. There's no fees for doing that if you wanted to. And I know somebody had asked the question, I did see it pop up around, can a bounce back become a civils? Yes, as long as if you've got a 50 grand bounce back and then a few months go down the line and you really think you need more money and it then needs to be a civils, as long as the bounce back is repaid by the civils, that's fine. What you can't do is have two running alongside each other. You're not allowed to do that. And as I say, and if you go into a different lender, declare the fact that you've got the bounce backs at XYZ Bank and you're going to ABC Bank instead. Yeah.
Yeah, and can you change a bounce back loan into a bigger CBIL loan?
Yes, you can. Yes, you can. Yeah, trying to do. Yeah. We got some more.
Just looking. So having discussed the scheme then, what next steps would you recommend businesses to take in terms of attaining financial support and approaching lenders?
I think pull together all your information, as I suggested. If you're uncomfortable with doing your own cash flow and your own sort of projections, always get them overviewed by your accountant. That's what they're there for. They're not just a number cruncher to produce your tax return or a set of figures that nobody looks at. Use them for their skill set, so they'll know what's right to put in the cash flow and what's wrong. Get them to overview it. It may involve cost, but if it means you get the loan and the facility, then that's a positive thing. And they know your business hopefully well, and you've got a decent relationship with them. So make sure you get the numbers checked and overviewed if at all possible. If you're entirely comfortable with doing your own cash flows and you've done them for years, great. But not every business is, and sometimes they don't know where to start. And they do make mistakes, and they'll balance at the start and things like this, which is not ideal.
And someone else has asked, must we have a minimum turnover in the previous years to qualify?
Is this for civils or bounce back? If it's bounce back, then you need to have some turnover in the previous years. It's not a minimum turnover requirement, but clearly, if they're looking, if you've only got 100,000 turnover, the example I used earlier, the maximum loan they're going to let you have is 25% of that turnover, which is 25 grand. It's not going to be the 50 grand. So I spoke to a business a while ago where they'd sort of pivoted into doing a different product, and they didn't have any accounts for 19, they've only had accounts for 18. So on 18, they would have qualified for a bounce back loan. On 19, because they'd done a lot of research and development work, that turnover was less than 50,000. So, if they're trying to get a bounce back loan, it's going to be tiny. It's not really going to help them. And I said, then you need to, in conversation with the bank, to see if they're prepared to use the previous year's numbers based on the fact that you weren't, you were trading, but you weren't actually selling at that point. You were in a sort of development phase, and you were trying to sort of develop that new product and that service that you were trying to launch to market. And if they're prepared to assist you on that basis. Yeah.
And are there standard forms to complete that we can access to view what is required?
So on bounce back, there's nearly all the banks have a standard application form. So if you've got a relationship manager, I'd contact them. If you don't, and a lot of businesses don't, nearly all the banks will have it on their website. In terms of CBILs, there's not a standard form unless the bank has a standard one they're doing themselves. We don't have a standard form we give to them. I would approach your lender and ask the question, do you need me to complete any additional paperwork? Is there a standard form? And see what they say.
Yeah, great. We've had another question through that says, can you give an indication on likely interest rates on CBILs for 100k?
Ooh, it's nigh impossible because it's based on the pricing model that each bank employs. Rates I've seen a really good credit, as I used to call it, in terms of relatively low risk. I've seen as low as sort of 1.5% to 2%, and I've seen certainly with the larger commercial lenders around about the 6% mark. So in that sort of banding, but I wouldn't get fixated on the rate. I spoke to somebody a while ago who got a CBIL facility agreed by their bank, and she was going, "Oh, do you think I could get a cheaper deal somewhere else?" To be honest, it was at the height of the pandemic, and I was like, well, really done on getting the loan agreed, because actually you've got through to your bank, because that was one of the big challenges, you got facility agreed. You may be flogging a dead horse at that point by trying to go to another bank, because certainly with CBILs initially, they were prioritising their existing customers first. And who knows you best? Your existing lender. A lot of people will shop around, I get that, but the rate that she was offered was nearer the 1.5 to 2 than it was the 6. That's how I put it that way. So it was a good deal. There's an old phrase about not looking a gift horse in the mouth. The deal's on the table. Don't lose the deal for the want of doing. So yeah.
Great. And we've just had a follow-up question to that, which is, so we don't ask for a number that just isn't feasible. Is there a measure which gives a rough idea of the affordability in the bank's eyes?
It's a difficult one. The example I'll probably give is I asked what the one business, and he said, I'm going to borrow 400 grand from a bank. I said, how have you got that? Where have you got that number from then? Well, I've just sort of plucked it out of the air. Right, hang on a minute. Can you service 400 grand? Ask the bank to do you a repayment calculation, which they can do relatively easily based on what interest rate they would indicatively charge. And if the number looks too great, because you have to start servicing it at some point and start making repayments, and it looks too much for you, then it is too much for you. Ask for what you need, not what you would like. They're two different things. Ask for what you need to get you over the number of months ahead, taking on board the fact there's lots of other schemes that are out there, furloughing and so on. Furlough's been renewed till October. So the biggest cost for most businesses is their wage bill. If that wage bill is effectively going to be covered by the UK government until October, and you can furlough and unfurlough staff as you see fit, as I understand it, then ask for a number that's realistic. That business, for example, I had a conversation with, and I spoke to him a while later once he'd had a conversation with an accountant. The true number he needed was 250 grand. Yeah. Don't saddle your business with debt that you can't service. But so get them to do a repayment calculation, they'll do it for you. Just say, well, based on indicatively what I've told you, what do you think the monthly repayments would work at the end of year one? What would I need to start paying if you got a 12-month repayment holiday, for example? Yeah.
To add to that, Shaun, as well, I'd say put a great deal of emphasis on cash flows. That'll, if you do it properly, it'll show you how much money you need.
Yeah.
There's no point, as you say, there's no point in asking for more money than you need. And if you do as good a cash flow as you possibly can, it'll give you an idea.
And that's the best way to do it, to be honest. It gives you a good figure to then take that forward. It goes back to what I keep saying, and I'm going to keep reiterating it. It's not a grant, it's a loan, and you've got to be capable of servicing it. And don't take on debt that you can't service, because it's a pointless thing, because it could ultimately restrict your business and your growth plans, because you might, in a year's time, you might want to come and borrow money to buy some premises. It might restrict the ability to do that because you fill yourself with a debt that's too much. Just be conscious of that. It's not free money. There's a cost involved in what you're doing, and people need to understand that. We are seeing a lot of people getting CBILs and bounce backs agreed sometimes and not drawing them. They're sitting on them. because they wonder, you know, can I get by with what I've already got in terms of cash and other schemes, and don't need, you know, I've got it as a sort of a backup, a fallback position. I've had lots of questions around, can I draw in tranches, as it were, so not draw the whole loan on day one. Again, it's up to the lender to see if they're comfortable with you doing that. So sometimes you just think, well, I'll get this number agreed, but I might not really need that number now. So actually, can I sort of, you know, I asked for 100 grand, but I only need 75, you know, that type of thing. So there's a little bit of that going on as well.
So, sorry to interrupt, Shaun, but on that note, if a client, say, has a working capital need of 50 grand, they meet the rest of the criteria, there's plenty of affordability, but they've also got, say, an unsecured loan at the minute on a relatively high interest rate, can they use either of the schemes to repay their existing finance?
You shouldn't really be refinancing debt on the scheme. It's the lenders are discouraged from doing that unless it's you know, clearly articulate COVID impacted. Because where are you transferring that risk? You're transferring the risk to the UK government, and that's naughty. So we discourage lenders from doing that, to be honest. There are exceptional circumstances where they can do it, but it shouldn't be as a standard thing. What we have seen is we've seen people on the hook with a lender for a personal guarantee, for example, are not COVID impacted, and they're trying to get themselves a CBIL facility because they want to be released from their personal guarantee. They're doing it for the wrong reasons. They say there's an opportunity to get off the hook for the PG. And I know PGs frighten people. I get that. I understand that. But you know what? If you don't have any confidence or faith in your business, if I'm a lender, why should I?
Exactly.
Yeah.
And that's me with my hard hat on from being a commercial lender across 3 major banks. You know, you've got to have faith in your own business. And sometimes it sounds awful, but you have to put your money where your mouth is. That's the reality of the situation. Yeah.
And can any bank lend in any region area then?
Well, on our website, we have all the accredited lenders listed for the different schemes. So whether that be CBILs or Bounce Back, or 2 other programs we operate, which I'll mention in due course. So you just literally would go on and you can filter it per the program, the amount you want, and also the type of facility, because there are certainly with CBILs, there's 4 different types. There's asset finance, invoice financing, term loan, and revolving credit, which is effectively an overdraft or working capital facility. So you can filter those and then see which lenders operate in your particular area and for your particular amount that you're looking for and the type of facility you want as well. So it's worth going onto our site to have a look at that. And new lenders are being added all the time. There was 4 new lenders added yesterday. The lenders are announced on a Wednesday now, every Wednesday, effectively.
Right.
Yeah.
And someone's asked, is a CBILS loan also related precisely to past turnover, or can proof of impending turnover be adequate?
They will look at past turnover, but if you're showing them projections, they'll also take that account. But the projections have to bear some resemblance to the previous turnover, and if they don't, there has to be quite a, you know, what are those projections based on? If your turnover was only 100,000 last year, and you're going to do 1 million in the next 12 months, my immediate question to you is, well, where does that difference come from? What are these assumptions based on? The number of times I used to get set projections with no assumptions provided whatsoever, and I sort of I would have to go back and ask lots of questions, or indeed find a crystal ball and try and figure out how they'd come to that conclusion. I'm not going to do that. I'm going to go and ask you questions. So be prepared to defend your numbers as well. You know, you must. The best way of doing something is to sort of, these numbers are based on, and then, you know, a little paragraph. The other thing I was going to mention as well is that when you are lending as well, if you've never borrowed before, or the bank has little knowledge of you, maybe it's a little synopsis of what you do as a business, who you are. It's less relevant for Bounce Back, but certainly for CBILs, and a little bit about the individuals involved in the business. You know, the softer stuff around who does what. You know, this is Fred. Fred's the ops director. He's been with us 20 years, whatever it might be. That type of thing. The MD's this. He's run previous businesses. He's exited from this business in the past, or he worked for this company and then started up on his own doing something similar, whatever. Just to give them a little bit of background. You don't have to write War and Peace. That's the worst thing as well. I get the other extreme. I'm involved in the civils accreditation process, and I had one lender who sent me a 60-page application. I don't know when he thinks I've got the time to read that. Yeah. So less is more in my eyes. I'd rather you wrote one line and got directly to the point than write me a paragraph. Don't write me a page when you can write me a paragraph. You know, be succinct, be precise. I like bullet points. They just work for me. Don't write me an essay. You're not at school anymore. I don't need a 10,000 word essay on why you should have a civils loan. Yeah, that's not required. Just nice and succinct and to the point. It's much easier for, you know, the lender has only got, their individuals have only got a certain amount of time. Bear in mind as well, they're probably not working from their office, they're working from home. Just as I had before there with the Amazon man and my wife wandering past with car keys. Fortunately, she didn't walk around that way because that would have been worse. People are working from home. You know, I'm fortunate I've got no small children. I've got colleagues, and I know there's lending managers out there with small children, and they're trying to balance, you know, entertaining children and homeschooling and all these responsibilities, or there might be carers, family members. Just bear that in mind. So their time is as precious as yours, and just be conscious of that. And I'm going to say something here which may sound like hard, but you're not the only customer in the world. Besides you asking for a loan, they've probably got 5 or 10 others in the queue as well. I spoke to one relationship manager at the height of the pandemic. He had 56 applications on his desk. Where do you start? You know, I guess all you can do is start with the one that came in first, and that's the most, you know, the oldest one, if you like, and then work back from there. But yeah, quite challenging circumstances for some of them. You know, it's that we're all working in a very odd environment at the moment.
Yeah, definitely.
Just bear that in mind.
Okay. And what is the percentage loan to turnover or profit on the civils loan?
In what? So the percentage turnover. There's no real percentages or hard and fast numbers. You know, the lender will look at it based on the numbers you provided in terms of your annual accounts, your management figures, your projections, but there's no hard and fast rules. And different lenders will probably adopt slightly different criteria depending on where they are in the marketplace. It goes back to the point, ask for what you need, not what you would like. It always comes, they're two different numbers. Yeah. This is about providing a cash bridge to get businesses over, whether it be bounce back or civils, over the next few months of low activity, low turnover. You know, think of all the pubs and restaurants that are closed. Think of all the businesses, unfortunately, some of the national chains that have failed. My wife's in mourning because Warehouse and Oasis have gone bust. You know, just be conscious of that and ask for a number that is appropriate for your circumstances. Yeah.
Great. We've had another question come through. We are a highly seasonal events business, mainly summer based, so may have no income till around May 2021 in a worst case scenario. Can a CBIL cover that kind of scenario for no income for that long?
Well, you could, in the sense that we're in May now. So if you were applying for a CBILS loan, you could ask for a repayment holiday of 12 months. Or you could explain to the lender that I suffer from seasonality. Some lenders, in certain circumstances, now I've seen this done, particularly, for example, in the leisure sector, where businesses perhaps see all that turnover in this, in the summer period, spring summer period. So the repayments are geared around paying in the spring and summer, and then when it's very quiet in the autumn and winter months, and there's little or no activity, you've still got some cost there. They make either reduced or no repayments. So you do like a sort of seasonal lending profile, and you can ask that at the outset for the lender. Equally, with the CBILs, you can ask for a repayment holiday at the outset as well. So that would potentially carry you for the next 12 months if you wanted to do that. Just have a conversation with the lender. That's what I would suggest.
Yeah. And another one is, when does the CBIL's facility availability expire? So when is the deadline for applying?
Well, currently the deadline is the end of September 2020. I don't know if it will be extended. I'm sure we'll find out in due course. You know, this is not my day job. As I say, I normally help with other programs behind the scenes and deal with accountants and lawyers and sometimes speak at events like this. But I'm sort of part of the accreditation team at the moment because I've got a lending background. So technically I should know what I'm looking for. Will it be extended? May well be. If you compare it to Bounce Back, that's till early November. So it might make sense for them to run concurrently. If I was a betting man, and I'm not, and I'm speculating here, I could see them possibly going on till the end of the year. What I wouldn't do is leave it too late. don't arrive at 1 minute to 5 on the 30th of September 2020. It's probably not a good idea.
Yeah. And who makes the actual final decision on the CBIL's loan request? The bank, such as NatWest, or the CBIL's approval board?
Well, we've accredited the lender. It's the lender, if it's NatWest, for example, or RBS Group, it's their lending and underwriting team for lending decisions. So the relationship manager in conjunction, I used to work for RBS, so the relationship manager in conjunction with that team. We are not influencing the lending decision. That's not, you know, the only influence we have really is more on that bounce back thing where we've taken the lending decision away from them. You know, and we've said it's 100% guaranteed. I'll not name the bank, but I did have a lender ring me up and say to me, so with bounce back, I'm not really making a lending decision, am I? And if I don't want to give them the loan, I don't really have a much option if they've asked for the loan. Well, if they meet the criteria and they've asked for the loan, you can't really say no. There's no justification for saying, remove the justification for saying no. CBIL, it is down to the underwriting team of that particular bank in conjunction with the relationship manager to make the decision. It's not for us to tell them what to do. We've accredited them, trust them to use their own judgment.
Yeah. Okay. And how is the bank currently supporting businesses with the CBIL scheme? And do you have any examples of this?
Well, currently, I mean, I haven't seen the latest numbers, but CBIL scheme had certainly approaching 8 billion the last time I looked. Thousands of businesses had secured facilities with CBILs. That's sanctioned facilities, not necessarily drawn, because sometimes people don't want to draw them straight away. Bounce Back had done around 14 billion. This was as of last week, back end of last week. Again, thousands of businesses supported. So we monitoring the program. We are obviously encouraging. What we're seeing is lenders are coming to us, and more lenders are trying to join the programs, both CBILs and Bounce Back. So we're trying to encourage those lenders to come forward, and I've been involved in personally accrediting 3 lenders for the program. That doesn't sound a lot, but you've got to envisage we only had 40 on it to start. We've now got 80 plus, and we've got another load in the wings, and we announced 4 just yesterday who've joined the program for CBILs, and we have other ones that then join Bounce Back as well. Sometimes they're on both, sometimes they're on one program, depending on circumstances. So we also, with our own regional programs, Northern Powerhouse, Midlands Engine Fund, Cornwall and Scilly Isles Fund, and the Joint Fund in Northern Ireland, we're obviously trying to work with our partners on those programs, who are people like FW Capital, Mercia, and people like that, and Maven, to make sure that businesses, if they're impacted and they have facilities that they've secured through those programs, can perhaps have, if it's debt funding, perhaps have some repayment holidays and breathing space to cope with the crisis. That's the thing, that beyond CBILs and BIBLs, a lot of banks have given repayment holidays to businesses for conventional commercial facilities. They've given them standard overdraft facilities as well to help them in standard funding facilities. They've also helped them personally with capital repayment holidays for personal mortgages and personal loan facilities. They call it forbearance is the phrase. always approach your lender. Don't leave it till the last minute. Don't take your hand and hope it'll all go away, because it won't. It'll still be there when you take your head out of the sand. Approach the lender, have that upfront conversation, ask for help sooner rather than later. The worst you can do is wait and hope, because typically if you wait, it'll get worse. It's not going to get better. Yeah, it's not going to get better. So you may as well get in there now and be upfront with the lender and be honest. I am aware of one business in the UK, and I'm not even going to name the region. I don't know the name of the business, but they've gone around getting 3 CBILS loans agreed because they really want 750 grand, but he's trying to get there's individuals trying to get 250 grand agreed by 3 different lenders. He hasn't told them about that. That's completely unethical. If that business was to fail and they claimed on the guarantee, we will find out. We may find out before as well. We have checks, and it will invalidate the guarantee. And you'll get yourself in a whole heap of trouble. It's technically fraud. You shouldn't do that. And also, you're taking the time away of that relationship manager who could have been helping another business that's in the queue that needs help.
Yeah, exactly.
But you will always get chances. Unfortunately, that's what life is. Yeah.
Well, thanks, Shaun, and thank you for joining us today. It's been really valuable information, and I think it'll give clarity to a lot of businesses out there who might be needing this kind of support. Is there anything more you'd like to add before we sign off?
I'll just mention the 2 other programs just so people are aware of it. There is a CBILS Large program, which is really for large corporates where they want to borrow more than 5 million. And that goes up to 200 million now, and that sort of sits in the space between that and a very large corporate program that the Bank of England operates, particularly for household names, and a lot of businesses secured funding through that. And there's also the Future Fund that launched recently. So the Future Fund is about helping early stage businesses where they are pre-profit or pre-revenue, where they have had investment in the last 5 years of at least 250 grand. So that's equity investment, and their lead investor approaches the bank and is prepared to put in a minimum of 125 grand and seeks match funding from the program. It's done as what they call a loan note, so it doesn't go in as equity straight away. It goes in effectively as a form of debt, no repayments on that, which can be converted into equity later date. And the reason for that is, how do you value a business in the current climate? My wife works for a conveyancing company, and she's furloughed at the moment. Susan just keeps wandering past. But one of the challenges they see is, a lot of property is being revalued in the current climate because people are making lower offers because it's an opportunity to buy something. So how do you value a business in the current climate? It probably is not what it was worth before COVID. It will recover, hopefully. So Future Fund is a great way that you've got little or no revenue, you're perhaps in a development stage, or if you are generating revenue, you're probably loss-making. You can't service a conventional loan facility. Because what is a CBILS? It is a loan, that's got to have a repayment. And I've said that loads of times, but that's the reality. Because so many people think it's some sort of grant. It's not. Yeah. So Future Fund is available. All of these things, BIBLs or bounce back, CBILS, the names are great. CBILS Large, I call it, or seal bills, somebody called it the other day. And Future Fund, I don't know where that name came from, but there you go. Completely different from the other 3. Are all available on our website, and there's lots of information. If you're a business seeking funding, go on and have a look, and hopefully you can secure the funding you need to take your business forward.
Great, thanks for that, Shaun.
No
And thanks again to everyone for watching. If you'd like any more information, we have a number of articles and how-to guides to support during COVID-19, as well as other topics. If you go to our website at www.weareumi.co.uk, and keep an eye out on our socials for upcoming webinars on different topics. Thanks again, Shaun, and thank you for watching, and we'll see you next time.
Thank you.
Take care. Bye.
Bye.
Bye.